You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to the Options Playbook, the program where we break down cutting-edge option strategies and explain how you can incorporate them into your own portfolio. Whether you're looking to grow your capital with some offensive maneuvers or protect your investments with defensive plays, you can find them all in the Options Playbook. The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities LLC, member FINRA and SIPC. Now, let's open the playbook and get started.
Welcome to Options Playbook Radio. I'm your host, Brian Overby, Ally Invest Senior Options Analyst and author of the Options Playbook. All right. Well, to start by mentioning that we are taping Options Playbook Radio. It is Wednesday, September 29th, and the markets are closed at this point in time. We had mixed markets. We had the NASDAQ down about 34 today, with the Dow up about 90. And then we had the S&P 500 index up 7 points approximately. And more importantly, the theme of today's show is going to be the VIX. We've been talking a lot about the SPX and the VIX just in general recently because of the volatility that a lot of people always like to say is caused by September. No real reason why, but it seems like September, year in and year out, has more volatility than most of the other months in the marketplace overall. And we still have October coming up. And October is usually a close second to September. But we see the VIX right now at 2256. It was down 69 cents on the day. And that makes sense that the VIX would be down a little bit. But we did have a decent run up. We're still up above that 20 handle. And today we're going to actually look at a short spread in the VIX index. We're going to talk about a little bit of the nuances. If you're going to be trading VIX options, you have to realize that they're different than any other option that's out there in the marketplace. So we're going to discuss a little bit of the needs to know if you're going to be trading VIX options overall. All right, so let's go back to last week's trade, and it was a very short-term trade, and our timing, to be blunt, was correct on the forecast and what was going on in the marketplace. Now, as always on Options Playbook Radio, nothing is meant to be a recommendation, but I don't really have a trade for you here because we talked on the show last week about doing a call vertical. And we set it up a little differently. We bought a little bit in the money option contract and then sold an at the money option contract, meaning that even though we paid a net debit for this trade overall, when we did this trade and we set this up, we were selling more time premium than we were buying. So it kind of worked like a credit spread, but you're paying a debit for it. But if the market just stayed where it was at or went higher, you were going to be fine on that trade. And then we also looked at, well, let's say it doesn't stay where it's at and it goes lower or it goes lower overall. And what could we do? And we talked a little bit about rolling into a butterfly. I'm not going to get into the detail. If you want to learn more, obviously go back and listen to last week's podcast. But the market did go up. We never had any issues overall. It was a 2-day trade. You had all day Thursday, all day Friday. part of the reason why we put on the trade was just the fact that volatility had spiked, made it interesting to just do a 2-day trade. It'd be very hard to pull that off if we had the VIX down around 13 or 14%. But on the day that we were doing this trade, it was around 18, 19% overall. So we were able to get it done for a decent price. If you hung it out to the Friday, the maximum was received to the upside. You had a 10-point wide spread, paid $6.10 for it on paper. And that means that you would have made $3.90 or $390. And obviously, you always got to think about commissions on that trade. All right, so this week, let's stay with the same theme. We're messing with the S&P 500 index because of these wild swings in volatility. Now, with that said, the VIX hanging around 20 and breaking above and breaking below 20 and staying in that range means volatile markets overall. But by all means, this is nothing like we were experiencing during the downturn of the market that was caused by the pandemic. Those are extremely volatile times, and that implied volatility, and in particular, the implied volatility of the options in the VIX index that trade the VVIX is how you would actually track that, just skyrocketed. And then when we have that much volatility, it's really hard to try to trade VIX options overall because you really don't know if you're battling where the VIX is going or if you're battling where the volatility of the option contracts are going. So this range is an interesting range to me, and that is why we're going to talk about the VIX today. And as always, the goal of Options Playbook Radio is trying to find certain situations where the 40 plays that are discussed inside the Options Playbook might apply. So we don't talk about the VIX that often, and part of the reason why is that it's just a hard index to understand. And I say index lightly because all it really is volatility, right? I guess it is an index only because they didn't have a better name or a better something, a nickname or something better to call it overall. But it's based off of the 30-day implied volatility on the option contracts inside the S&P 500 index. So if I go and I look at my VIX watch list, here's the thing that you need to know. If you are trading the VIX and the VIX is oscillating, that has very little to do with your option contract price. It has a little bit to do with it, but not as much as you'd think if you're trading out the further outdated option contracts. So basically what I'm saying is that the VIX options track the futures market for the VIX as opposed to the spot market or the actual VIX index. So for example, today, I'm going to go through the trade and I'll talk a little bit more about that concept if you're not familiar with it. But the trade that we're going to look at today is we're going to actually sell an in-the-money call spread. And part of the reason why we're going to sell that is that if you're in the VIX index, it's a cash-settled index. It's a European-style index, so it cannot be assigned early. And if I'm selling option contracts that are in the money, if our forecast is correct on our short call spread, that means they will be out of the money. That means they would just expire worthless, and I don't necessarily have to close out that trade. And I would be dealing with lower price options that usually have a little bit better bid-ask spread overall if I want to close it. Now, if the market goes against me, the exact opposite is true, right? If the market goes against me, those call option contracts become in the money if the VIX goes up overall. And I should say the VIX future goes up overall. And if that does happen, well, then I getting out of the trade might be a little bit more of a pain. But if I'm putting this trade on, to me, it's more of an all or nothing type strategy. And that is the way that I usually approach my VIX options. Anytime I could close something out, if I'm short any type of spread in the VIX for a dime or 15 cents, I'm going to do that. But just because getting the risk off the table with the VIX index is necessary, more so than it would be with underlying stocks, okay? For obvious reasons, I should say, too. So here's the trade. We're going to use the October monthly expiration, which is the October 13th expiration, we're going to be selling to open the 21 strike call. We'll be buying to open the 23 strike call. This is a 2-point wide spread. And with the markets closed right now, we're looking at a midpoint net credit of 73 cents to the account. So I ideally would like this trade to be a 50-50 trade, and that I could bring in $1 on a 2-point wide spread, and then I'd have $1 of upside and $1 of risk. But the markets aren't open right now, and we don't always get to pick the day that we tape Options Playbook Radio. So we're going to run with this. So our max risk is $2 minus 73 cents means the maximum that this could trade is $2 minus 73 cents. That means that you have $1.27 worth of risk if I put this trade on. Now, the October futures contract that expires, that this will expire on October 13th. Now, that is a Wednesday. I just want to point that out. That's when VIX option contracts expire. That option contract is trading at 23. So we're actually doing an in-the-money call spread here. We are buying the most at-the-money contract, the 23 strike call, and then we're going down and we're selling the 21 strike call. This means that if we put this trade on, we want that market to go below 21. We're selling the more expensive option, buying the cheaper option, and our best case scenario is that the VIX index actually goes down below 21, and more specifically, the VIX future goes down below 21. So the symbol for on the Chicago Board Option Exchange, not all brokerage firms have it. LI Invest does, but I should let you know that I was in the new products committee at the Chicago Board Option Exchange, and I always complained about the fact that the VIX option chains go by the ticker symbol VIX, but all the subsequent expirations you really do not know the underlying value of. So the Chicago Board Option Exchange does go out, and on a monthly basis, they create an index based off of the future. On the Ally Invest platform, you type in $VIX OCT for October. If you wanted November for the monthly contract, you would do $VIX NOV, and et cetera, et cetera. And that would give you that monthly expiration, and that would show you where that monthly futures contract is at. Obviously, very important if you want to trade that October 13th expiration to know where that actual underlying is at when you're putting that trade on and what is happening with it. Now, if you're new to the futures market overall, and we don't really talk about futures a lot here on Options Playbook Radio, realize that October futures contract has to eventually come in and trade where the spot index is. And that's the futures term for the actual value of the VIX index. So if you're doing that trade 14 days from now, you need to know that the VIX, the actual value of the VIX matters at that point in time, because eventually they become the same number. Right now, there's about a 50 cents difference in between the two. And I guess overall, that's a good thing when you think about the fact that you want that to come in. It's probably better that the VIX index, with 2 weeks remaining on this trade, is trading at a lower value than the future. Ideally, we would like to go back down and break below that 20 level. That would be a good thing for our trade, and take the VIX October futures contract with it. Okay. Now, the only other thing to note, and I'm just going to make a note of this, we want to pay attention to what's happening to the actual volatility of the option contracts inside the VIX index. The VVIX is a 30-day weighted average of the VIX options. So it works very similar to the way that the VIX does on the S&P 500 index, but the VVIX is the VIX of the VIX, and that's trading at 119. So even though we had a fairly decent spike up in the VIX, 119 isn't extremely high in the VVIX. It's a little bit above mid-range, I would say. But just for reference, when we had the downturn just a few days ago, when we had the big downturn that initially started the sky is falling mentality before we had the big rally right back up. The VIX ran up to 145, 146, right in that range before it came back down overall. So 119 isn't a ton of volatility. It's on a little bit on the higher end, but we're going to pay attention to where that is next week because I purposely went out 2 weeks in time so we can look and see where the VIX future is next week. We can get a quote on it. There are going to be some valuations on this option contract. And I'm going to end by saying and emphasizing that if you've never traded in the VIX before, you definitely want to do this as a paper trade. You want to try to watch how the market reacts. When you're trading VIX options, you're trading the volatility component as much as the actual VIX movement because there's so much juice in these option contracts overall. And that's going to be it for this episode of Options Playbook Radio. If you have a topic you'd like to discuss on the show or a question you'd like us to answer on the program, you can send them directly to me at theoptionsguy@invest.ally.com. If you'd like to learn more about all the educational events over at Ally Invest, the best thing to do is just follow me on Twitter. I tweet about all of them. My handle is simple. It's at Brian Overby. And thanks for listening. We'll be back at the same time, same place next week. Until then, may all the options you bought finish in the money and all the ones you sold finish out.
The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities, LLC, member FINRA and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.